Everybody, happy Friday. First of all, good to have you back here for our markets and sectors class. And by the way, congratulations, you made it through the week. It's been a volatile week, but maybe we'll end up on a bullish note. It's good to be here with all you folks. Hey, today I want to take a look at really pinpointing and trying to find out where leadership is, sector leadership is, relatively speaking. And when I say relative, I'm saying relative to the S&P 500. Do we have an approach using Thinkorswim capabilities, specifically on the ThinkScript side, to help us identify sectors and industries to point us in the right direction for those stocks that are showing that strength? That's what I want to talk about today, because we are seeing some standouts in that regard. It's a very, very simple one, but so easy to run. I want to make it a dynamic watch list for you so you guys have this going forward, specifically though, for markets and sectors for that top-down analysis. So we'll dive into that, as well as some other aspects that we do like to dive into this class. But last class of the week, like I said, great. Glad you all made it through the week and actually into this class as well. But yes, hello to you, Jay Richardson. We've got Will the Sunset guy. That's right. As well as Robert. We've got hello Robert, hello Ricebird, and her name was Lola. We've got Lola back here with us today. Hello to you, Lola, as well as Scott, Michael, Austin, Life in the Fast Lane, and Sharon, and many others, folks. Good to have you here, folks. Any questions you have, throw those in the chat so we can address those for you. I'm joined in the chat by a really good friend, colleague of mine, who has spent at least 6 weeks with me in Chicago, as I was considering looking at that just recently. We were there for six weeks at different intervals, but Brent and I there for quite a while. So he's a good friend of mine, colleague, folks. Great to have Brent here with us. Did you have fun in those trips, Brent? Was that a good time? Anyhow, we had not too bad of a time. But with that, well, I'm going to turn it over to some disclosures before I get lost in the minutia here. All right. Information here is intended for general information purposes and education purposes only. Paper money software application for those education purposes only as well. Now, investing does involve risk, including the loss of principal. For some products and strategies, loss of more than your initial investment. Important to be aware of. Now, in this class, I do like to reference futures and futures options trading, and I've got a few wild cards to show you guys. It's always kind of fun to say, hey, what's moving in the futures slash commodities world? And I've got a commodity one to show you today that's interesting. One up and one down. You probably can guess the upward one. But folks, we just look at the charts here. So it's not suitable for all investors. Futures and futures options trading does involve substantial risk, but we don't trade them. We just look at the charts. And final disclosure slide right there. So there you go. Let's see. I had to read this. It was definitely better because I got to absolutely. That's what I was thinking. Brent, if they would have sent each of us individually, that would have been a rough go. But we had a good solid, I want to say we were there for at least a month and a half in total. But yep, excellent, Brent. It's fun to look back at those times, but not always, as if we were right in the middle of them, in the midst of them. Okay, well, let's get moving on here and let's dive on into the markets. Hey, I did say I promised you right off the cuff a commodity because we can't talk about the futures, right? Futures, this falls into the commodities. Here's one of the bullish side today, and believe it or not, we do have some of the sectors and industries sticking out here. Look at this. This is gold, and gold can be a mover. Yeah, that is just the commodity. We just look at the charts here, but look at that. That's been moving, and we talked about this last week. We didn't know it would, we were looking at it saying, maybe it will go, but we don't know. But we talked specifically, remember the group we talked about? It was the miners. Now there is an ETF for the miners. I don't go into the ETF in this class. We have another class for that. But the miners, we talked about what's in those miners. NEM, you guys remember that one? Yeah, it's continuing to bounce. Kind of a big run there, about from 90 to 130. We got AEM. We've got B, Barrick Mining. This one has mines outside the US, so they're kind of a little bit, here and there. I mean, there can be risk associated with it. There can be risk associated with anything, really, but maybe a little bit more risk when you get outside the US, clearly. Here's one though too, FCX, just to throw it out here, just get us, I know we're getting this started like in fifth gear here, but I wanted to hit this because it is tied to a commodity and we do have the ability to talk about this in this class because we do have that disclosure here. Now, this is one that is both copper and gold. I talked about it yesterday in the ThinkScript class as a potential. We didn't know, gold could have come down and consolidated. You never really do know. We just said, hey, this was one of those that did have one of those wolf waves associated with it from our discussion yesterday. And it led us to the potential for a breakout and a potential wolf wave follow through. There it is right there. Now, you have to say with this guy has been sideways for a while now. And many of you might see this too. What you're going to see with this is longer term this. And it really is an ascending sort of I'm going to go with a right angle triangle. I think there's too many up top that are similar, but it shows some upward strength. This is one that is gold and copper. So it's commodity related and it might be influenced by that gold. Well, I mean, you can see, yeah, there's a gap right in there. So yes, there is a gap. That's one thing that might just be going on. We talked about kind of a price projection on it yesterday, but I mean, you can look at the longest range, like here to here, from these highs to this low. And what you can do is you can copy this in excuse me, activate it or copy it, pull it over here to that top, and voila, that is your projected move right up about 90, right at, I guess to say right near 90, very close to 90 for that level. We're already up 76. We don't know if it'll make that range, but that is kind of a ascending or right angle triangle projection from the breakout. Little side note, pretty good money flow coming through here too. Yeah, starting to bounce up. Anyways, let's get into one. I said I'd have a positive one and a negative one. Here you go. LE. Yes, we're actually going there. We're going to live cattle futures. Uh, by the way, live cattle has been on a, well, not there. It's been on a tear. If you go to the store, some of those meat products have been expensive, right? I'm sorry, beef specifically. But that's a pretty decent pullback that we got right there. That's a weekly chart showing you that. If you just go over here, you can see that pullback. Basically, President Trump lifted the tariffs for 90 days to allow beef to come into the country because the prices have just been so skyrocketing high. You know what I mean? So just park that in the back of your minds. Don't know what will happen around that time, but it's really kind of falling right now. Good for consumers, you have to say. So anyways, I'd even say the locals aren't doing too bad with the prices that high, local producers, but there you go. All right, well, that was kind of our commodity commodity dump, commodity surprise here a little bit. Now let's just take a look at the markets here. That was the possibility that we talked about in terms of a flag pattern follow through. There may in fact be a longer term flag pattern that has been developing. That would be the dashed blue line that does go up outside of our screen, goes up quite high, but that could take longer to get there too, right? It's developed over a longer term time frame. Look at this. That's the shorter term one. We take this range, we add it here. That is this initial projection. Now, this projection, we've got three. We're on our third one here. The third one is the triangle. A, B, C, D, E. We broke out of it. You take the longest leg of the triangle, just like we were looking at on FCX, which was a right angle triangle, and you add it to the breakout range, and that's where an area here just above prior resistance. But the bottom line is there might be some positives here that some traders would be interested in. If I really zoom in, which is interesting here too, do you guys recognize that price pattern there? What is that? I'm going to move this line, make it a little easier to see. I'll just put it over here because it's the same price projection level. There you go. That right there. Do you see any candlesticks that could be a catalyst for the possible lag to start to unfold, which would get us above 8,000 if it does hit the target? Anybody see that one? There's a little delay in the chat, so I'm just going to throw it out there in case. And by the way, a lot of you just joining us here. Great to have you as always. And that would be what is that candlestick pattern? It is a Harami pattern. Okay, where the body of this candle fits in. Oh, there we go. Fits inside the body of, geez, that doesn't work. Let's go over here and try that again. There you go. Oh, much better. Just go to the auto, you guys, and do that. If you ever get, too tight, you've zoomed in. Auto right there, right there. You'll see it. And that's it right there. So a lot of times that's known as a Harami pattern. If the body does stay, there's still some time left in the trading day, 50 more minutes. But if it holds there, a lot of times you might get a bounce. It is interesting to come at the end of a flag. Now quickly over here, NDX. Yeah, long term, there's the long term flag, short term flag potential right over here. If I did, I mean, if we're looking at this range from the low to the high-ish range right there, I'm going to change the color though. Let's just edit. I'll even, well, the width's fine. Width is fine. Let's go over here. We put it to a blue. We'll duplicate this guy and we'll put it here as a short-term flag. That's kind of a flag pattern within a flag pattern, long term, short term. But there you go. Oh, right up to about 32K. Yeah, 32,000, 35K up top here. But will we get that bounce? That is, folks, the ultimate question. Will we get the bounce? We're seeing some interesting insights. Got a couple of potential flag patterns within flag patterns. We're having a good day too. Just about up 100. But will we follow through within that time frame? Normally up to, if you're looking at a 10-day back period, summer rally oftentimes, not every time, but just on average, can end about the first week of September. That fits that flag if it were to go. But this longer one might take a little bit longer, of course, to hit. Okay, well, with that, hey, I wanted to do this too. Let's do this. Let's talk about well, the news just right now, we do have some stocks that beat earnings this week. I'm just going to throw them out there very quick so you're just aware of them because it's an earnings season and we did beat, but it's down. Yeah, we beat not by a ton, but ADI did beat, still holding a long upward trajectory. One of the companies to report this week. We had another one that reported today, which actually got off to a pretty good start. Ross Stores. There's the gap. It held up okay. I saw it kind of coming down earlier, down into the larger red candle. But there is your Ross Stores right there. Now, sometimes, not every time, but sometimes when you are in an earnings phase and you pulled back to earnings, pulled back to earnings. This was a bit of a pullback, kind of a rally to earnings, pulled back, kind of a theme here. But notice that post earnings, and that is, yep, 3 months, 3 months, and 3 months. Question is do we have another 3 month higher? But over that time frame, post earnings and earnings beats, we were getting a rally in here. So some traders might look at this and just say, well, we've been talking about flag patterns. Boom. Maybe there's a flag pattern right over there that might be, I mean, there certainly is a trend behind the scenes. We don't know for sure if there will be a flag, we never really know if there's going to be a flag pattern unfolding, but the trend suggests that maybe it could continue to run up a little bit higher and go beyond that point. So keep that in mind. Just park that in the back of your mind as you look at this, okay? That can be a very, very interesting point. All right. So, quick note, folks, just before we dive into it, if you are getting value out of this discussion, click that like button. If you are getting value, that is, you got to get value to click it. But also, be sure to follow us on Trader Talks if you're not already following us already. Here is that channel. Brent has some great stuff in here. You can take a look at his playlist right down through here, right up at the top. Wow, that's a interesting class. He's got right there some of the others posted down here as well, verticals and others too, market situations. But we talked about futures earlier. That is the trading futures class where actually those futures are being traded. Okay, I'll throw this in the chat, but just a quick note for you guys to check that out. You'll find others in there too. Do a swing trade class and a ThinkScript class as well. But love to have you on board if you're not already on board. Last one, I'll just throw this in here. WMT. Now it did beat, but gosh, you wouldn't know it by looking at the charts. Bam, went down. Yeah, it still beat expectation. It beat a number of different categories. But what had happened is it had kind of gotten priced a bit high. And well, that'll do it, right? That's 2022 on up. That's 40 to 130. You don't really think about Walmart as a growth stock. The valuation is really high. And if they're a little bit lighter, even though they beat, if they're a little bit lighter in that beat, bam, you can get that happening. You saw it over here too, and you just need to be very, very cautious about any company that might be outside of its range because it's you got to be extra, extra careful around earnings. If they don't really just oftentimes crush it, guide higher and beat, you might see some what they refer to as air pockets to get that valuation back to maybe where it might be longer term, perhaps. All right. Excellent. Now, let's do this. I do want to go over here and take a look at our markets in general and just see how we're doing before we dive into this. But sector grid, and you'll notice one thing over here. It's difficult to pick up on like sector. Well, I'll get into this, relative strength here in just a second. Key portion of our discussion today. But if you come over here and take a look, energy, yeah, absolutely been doing really quite well. Long-term base. Energy right there has continued on up. Now, materials. Materials has been flattened. So not everything in materials is doing great, but we're right on the verge of maybe another break right there in materials. Industrials, kind of so-so. We're actually been coming down a little bit. Discretionary still flat. Staples flat. Healthcare on an upward trend, not too strong. Financials have been rounding a little bit. Have you guys seen JP Morgan, JPM? Some of the bigger banks can really influence, and I've seen when they sell off, you can see prices come down here. Uh, there's your tech. So tech bouncing up, doing okay. Utilities and others just kind of being a little bit more flat. Now, comparatively speaking, if we go out and just look at the last 6 months relative to the S&P 500, 6 months, we actually have a lot going down, quite a bit. We have Staples, communication services, utilities, RE. We've got discretionary by and large coming down. Materials still lower, despite we saw gold. Industrial started to come down. So that just kind of shows, I mean, there are other areas that have been stronger, relatively speaking. Some of the financials, as of late, we mentioned, coming down. But healthcare relative to the S&P 500, technology generally relative to the S&P 500, but these three, oh, excuse me, sorry, energy, four. Energy, financials, technology, and healthcare. One of the main issues is, and this is relative to the S&P 500, right? So we're using this, I'll share this too, because this oftentimes comes up. I always have it in the description section down below the video for those viewing it on the recording. This is not a think script, but just to play it safe. Think scripts aren't guaranteed for timeliness or accuracy, but this is the sector relative strength. So we are using an indicator on here, but that's your grid chart. Of course, when you download it under setup, open shared item, and you put it in here, just paste it in, hit preview, it'll show up in the grid, which is over there. So you have to be in charts and then grid, and then you'll find your grids. That's how I've got my grid in there. So same process. For those of you that are new, you might not have seen that before. All right. So with that, when we look at these different areas, and here's a really interesting one too, just to kind of highlight. But if you look at materials, man, if we were looking at gold, if this just meant gold only, gold and silver miners or whatever, we'd be way up here right now. But we don't. It kind of lags. And that's why looking at relative strength across a broad list of industries can help us kind of pinpoint where those stocks might fall within there. Okay. And we can do that. There are different indicators to help us. If we zoom in on this right now and just highlight this just only, like let's just say materials. Let's see. Let me click on that, go into the box up top. I think many of you have seen this already, but there it is, relative strength. So we're looking at price performance relative to the S&P 500. That's what that is. I'll go over here and just show it to you. Relative strength. That's all that is. You can click on it here, but that's what makes charts so interesting because it does give us a sense of maybe where those rotational money, that smart money is heading. from just a rotational perspective. I've not really done too much work looking at industries before. This isn't going to come up. That's okay because I'm just going to go back over here anyways, but that's what's going on. And we're just making it, it's a ratio. The price of sectors, and that is all of the companies in the S&P 500 sector group, collectively relative to the S&P 500. That's what it's based upon. And that's what we're saying here when we look at this. In other words, energy is going up, not just going up, it's going up even higher than the S&P 500 is on a relative basis. That's two markers for strength. So not just the chart that we looked at over here, our sector grid, you'll see energy going higher here. Not just this, but the strength of these moves on a percentage basis outdoes the entire market. So what does it tell us? Basically, just in a nutshell, it just says this. Fund flows may be going here. They might also be going to healthcare, we talked about. Some of the materials and others, but what parts? And that's really the key point. So let's go and pick it up from there and take a look at how we can really kind of narrow this down even further here. Okay, so I'm going to come over here and I've pulled this up as a relative strength dynamic watch list for you guys so we can have this in place. Now, I've done this on stocks before, but I haven't really looked at it on a sector basis, which is like perfect for us to look at. Let's go behind the scenes and I'll highlight this. I'll share this. This is actually a Think script, but I want to show you a few things. Like, look at the net change over here. Now, what the heck is this? Just as a quick note, now there's a dynamic watch list and we can see it so we can be updated every single week. Markets and sectors. This is an important one too. We're looking at it over the last month. So do you notice over there? Okay, I gotta go back. This is important to put down. Okay, so I have this highlighted as a 1 week sector rotation. I have a 6 month. Real quick, I'm gonna shoot back here. If I look at the 6 month, we're really looking at like, here is like a, going back here is probably like somewhere in here is like a month, right? A month. You're looking back in time. You have to put a marker on it, how far you want to go back and look at relative strength. But I'm going to be looking at 20 days. I'm going to show you how you can change that. But I wanted to go longer than 1 week that I have over here, which is really quick. This is what's been going up on the week, but it's just going to give you a good enough feel. If we add 3 more weeks to it, not 6 months, but just a total of a month, that's maybe like one of the earliest signs of sector rotation. Where is that? Where might that smart money or some of those institutional funds really be headed to? That's why I chose it in terms of 20 days. Just so you know, behind the scenes, I mean, that's what I was thinking when I looked at it. So let's get back to it. There it is right there. Let's click on the first one because I have them linked here on the chart. Now that is oil and gas. We just talked about energy itself, but look at the strength of this guy. I mean, this is really powerful. Now we can find out all the stocks in this group too, no problem, right? We have the scan to do that. We'll do that at the very end. And there are ETFs. We don't talk about ETFs in this class, but some people do trade ETFs that might mirror something like this. Oil and gas. I mean, one of them would be like a big one. I'll just throw it in here right now. Like for example, it'd be CVX, right? CVX right here. This is one we actually did a swing trade on. You can see where that might terminate up here for a price target. But yeah, CVX, really solid sort of momentum. You got money flows, but that falls into that category and that could be boosting this, okay? Remember, these are S&P 500 groups of companies. They're going to be smaller baskets of companies. So we're looking at the actual industry now. We've broken down that sector into an industry to really find out where the strength is at. Let me hit this again. There you go. And you'll notice these can have beautiful, absolutely beautiful price patterns in here. Like this here is really interesting. Look at this. This is right towards the bottom too. Look at this. This is before the Iran conflict. Things were brewing, I guess, but look at this. So what have we done here? Is we've bounced up. We broke above that resistance. And what do we do? We literally went right down to it in a flag holding support. And I mean, we bounced off that prior high too. We bounced off these lows, broke above that range, a nice little bounce there. I realize it's kind of maybe a little long in the tooth at this point in time, so to speak. I mean, I always get cautious when things are too high, but these guys have had a run. I'm just letting you know that we're seeing this in hindsight, but yes, we could also, once we learn it, be using it in foresight. Okay, in foresight as well. All right, question comes in. Do you use RSI, MACD, et cetera, to evaluate sector strength? Yes, absolutely, Bar. We can do that too. Mostly though on an individual stock basis, once we can narrow it down a little bit. Let's hit a few more of these. I'll hit the scan. I'll share the scan with you guys here in just a second. There it is. There's gold. So this is going to be gold stocks. These are just indexes, right? These aren't tradable. That's just an index, but you can see it right there. It does show the volume, which is beautiful because it's got a collective of all of the stocks within that S&P within this index within the S&P gold industry. What is that? Those are the miners over there. But this showed early signs over here too. Let's continue on. It's just so fast. Automobiles are starting to show some strength off the bottom. Again, relative to the market, post 1 month. Last month. Is it another one here? Oh, that was so we have a couple. We have automobile industry and then we have the manufacturers as well. Anytime I see that, I'm always interested. TM, Toyota. Oh, so Toyota just had sort of a flag right there. You can see it. And then maybe a little bit of a bounce. What else do we have in there? Well, GM, General Motors. That's interesting because the GM kind of, you see what I'm doing? See how it's getting us insight to kind of what to look for because collectively we're seeing some strength. And when we see that collective strength, oftentimes, this is not going to surprise you at all, but oftentimes that's where the fundamentals kind of come in. If you get a whole sector moving, or I should say a whole industry, that can be of, insight there for sure. Well, I mean, it can be. You could take a look into it. Oh, right over there. So kind of fly. We'll see if that goes or not. But getting a couple of different autos in there as well. Um, Life science and tools. So healthcare, this you'd have to say would be a contributor to healthcare for sure. We looked at the healthcare previously. You'd have to say that's going to be a big driver to it. Um, Very much so. Consulting, IT, don't know much about that. Software has been interesting as of late. I would say that that's an important resistance level. Diversified telecommunications. Okay. I mean, yeah, a good strong move. Maybe it begins to just flag and go up higher from here. And another one within their telecommunications group. So telecommunications, I mean, what the heck is in it? Well, look at this. Integrated telecommunications. If I go over here under the Analyze tab and I have it set up for, let's see, fundamental. Oh, that's weird. Why is it showing NEE? I don't have any. There it goes. Wasn't really connected that well. Okay, I was hoping it would give us the name. Um, Let me show you this. So it's in integrated telecommunications sub-industry. Okay. So if I wanted to find out what companies are behind this that could be moving, I can go into my scan tab. It's really actually quite helpful too. If I wanted to look at it, I can go over here and I could say sectors and industries, and I could intersect that with an industry, and I could find it in here. I think that one's going to be under industrials. Um, or let's see, either that or communication services. Yeah, it would be there. Diversified telecommunication services, right? Right in there. So we could find out all of the companies in here. Not within the search I've got up right now. You can see the search I've got, but I'm just gonna cancel that search and just show you how I would do this. I think many of you already know, but what a great capability of the platform to find the companies in here too. So these are sectors and industries, right? I'm gonna go, I can actually just start off with the S&P 500, go down here under industry, communication services, diversified telecommunication services, click on all of them right there. I have zero filters in place. So if I click on scan, boom, I'm going to get all, that's it. That's the only thing that's in that group. But isn't that interesting? Three companies. What's going on with these? I don't know too much. I didn't know AT&T or Verizon might be moving as of late. There you go. Look familiar? Looks a lot like that one, right? VZ. Okay. CMCSA was the other one. Yeah, all very similar to that chart, right? We looked at the gold miners, NEM, big contributor to that one. Huge, right? I mean, just massive move. AEM, you can just get a lot of these in here as well. But this is the group. So how do we get these dynamically to show up? I'm going to go back to the scan here, and I'll share this with you guys right now. But this is the scan. This is relative strength updated. But we're using it specifically for sectors, and there they are. So what is behind it? The nice thing here is, yes, you have the description, so we know what it is. Okay, over the last 20 days, these are beating the S&P 500. Okay. So looking at looking at looking at these right here, what we've got, let me just share this, put this in the chat. Again, not guaranteed for timeliness or accuracy, but as long as the data that's flowing through the platform is good data, which it is, it's just a mathematical, equation to send this out to us. So here we go. Let's put it. So this is sector industry relative strength. This should save you guys a lot of time in terms of looking to see what's really, you know, outperforming the market in that regard. Basically, this is all it is right here. It's just a simple code. I just haven't done it towards sectors, and we need to start doing that. But it's just looking over that 20 day. If I wanted to make it a little bit longer, I could do that too. We would get different stocks, excuse me, different sectors, different industries here. But we're just taking the closing price of the basket, whatever that index is, of all those industries, and dividing it by the S&P 500. It's so simple, but very powerful because it says what of these is literally outperforming that major market index. And that's what we're after. That's what we want to see over that time frame. Okay. So once you save this, you got to save it and name it. Always, I just called it relative strength updated because I hadn't used this one ever before. Mine were really kind of weak previously compared to this. And click on save, and then you can come over here under your watch list and just make it dynamic so it pops up for you every single day. What sectors or industries are outperforming the market over that time frame? And then you come over here and click on to the right of watch list, scroll on down, and then just find it in your personals. That's the dead giveaway. When you see these little icons here, I've got to erase all these scan queries. I don't even know what they are. Um, but yeah, simple 50-day plus volume. This is, where it's at. But this is where you find them, where you can tap into it just continuously updating for you, okay, over that time frame. But it can give early signs too. I want to do this right now and just show you a different group altogether because a lot of times companies that do this, that start off beating on the week, can be those that beat over the next week, and then over they can beat, over a month's time frame, which is what we're looking at here, or like 20, 21 days or something, right? But I can do a 5 day and pick up on all the companies out there with this I mean, pick up on the industries and then the individual companies too. So I can come up top, and all I would do, excuse me, right up here, and all I want to do is just change this. Let's just do the 2 week instead. So been outperforming for the past 10 days. So some real strength is what we're looking at here. Now, in order for this to show up, I can scan it, but this list won't change. It will only change if I go up here and resave it. I'm going to do it right now. Save the scan query because remember, the watch list is based upon what we're saving. Watch, it'll just all of a sudden show up. There they are. See them? After I save it, it becomes dynamic. Look at this. So we have many developing behind the scenes right now that are showing strength. We've got comparisons over here over a 1 week time frame, and we can kind of go from there. And just go through and take a look and just see what's moving. We can pull up, like I showed you how to pull up individual stocks over here too. By the way, look at this investment banking and brokerage and brokers in general, the whole sub industry of brokers are doing well relative to the market. It's just that companies like we talked about, the big banks, having a little bit of a challenge here as of, well, as of this week. That's not going to be on this list because obviously underperformed the market clearly for sure. All right. You guys, if you're getting value out of these discussions, smash that like button. Let's Brent and I know about the value you're getting from these presentations. Okay. But this one is really interesting because you can change it very, very quickly. Again, remember, these are just the market days, as I showed you here. I'll pull it up one more time. Just go in here and you can just change it 10 days, 2 weeks, right? 10 market days is a 2 week time frame. And boom. I don't know what happened here, but uh it dropped. Anyhow, they're all back again, and probably just a paper money issue. That's okay. But if you look over here, look at some of these companies. Go ahead and take a look and just see what is going on behind the scenes. Again, I'd mentioned how to find those just earlier, right? As you go into the scan tab, or yeah, really the scan tab is the best way to search out individual stocks in here. But again, there are ETFs that match some of these. We don't go to this class, but there are some clearly that I'm just going through this list and recognizing, yeah, there are ETFs for those as well, for those people looking at those. But on that note, let's go ahead and yeah. So the materials sector itself over the past 2 weeks been doing very well. We know some of those areas though that had been doing well. And we can find out everything in that group too and look at individual stocks. But so that is here. Now, next up, though, we do, just in the interest of time, let me go ahead and just go ahead and go through our um, market and sector review just to see big picture market indications as well. Actually, real quick, were there any questions on this at all? All right. Hello to you, Janelle. Good to have you here, as well as Kevin, Rita, and others joining us. Lakshmi, great to have you here. All right. Um, yeah, so there is sector market review. That is the SES futures contract. But there we go. We look at it. One quick note as we wrap up our discussion here, really close out the week with our discussions. I want to leave you with that so you have fun with that sector strength as a scan, as a dynamic watch list to find out what's really outpacing the market and where those fund flows might be heading. Having said that, we ended up on the 2 week time frame, but over here, this advanced decline line on the NYSE is still a positive. You can see that higher highs and higher lows. You have to say that's a very, very good sign for prices continuing on, excuse me, advancers outpacing decliners. That's a positive indication. That's market breadth because, that's a larger basket of companies out there for sure. Just coming off all-time highs 2 days ago, the S&P 500 EW, the equal weight, right? That's another breadth indication. There's two back-to-back breadth indications of the market that could be pushing us up higher. Now, uh, we aren't trending down, but we are getting some lows out there too in the market. 52-week new lows versus 52-week new highs. Boom. The Hindenburg omen is coming. The key there, folks, the trend on the weekly basis. That can be very, very helpful because, we did see market breadth, but we are getting just a large number of companies that are going south right now, too. I mean, like 52-week new low territory. At the same time, a number of 52-week new highs. How I'd reconcile that is this right there. Advancers versus decliners. We have a fair amount that are making 52-week new lows, but the vast majority, the breadth of the market is making highs. If this starts to trend lower, very good possibility we trend lower in the market, at least over a period of time, and then we'll see what does unfold. All right, there it is. That is our 10-year seasonal average, and there you go, folks. Right, that was the time frame I was mentioning to you. Like the first week of September, a lot of times we might bounce up. We just got to go flat a little bit before mid-September. That is generally where we get the pullbacks coming in the market. On average, this is made up of 10 years that are not average, or I mean, they're all individual years. So some will go up, some will go down, but we'll see. We've kind of had a little bit of a similar flow this year that will be interesting to see. There's your 30-minute chart, always helpful to break it down on that short term. And that right there, if you're looking at this, this is your Harami pattern forming. In other words, you're getting a shorter term higher low. That is the Harami that we saw back over here on our daily chart. Right. Oh, yeah. That's not still in the 30-minute. Right there. See that, Rami? That's a higher low. Maybe it'll reverse and go higher. Question mark. All right, you guys. Well, we got a lot of info in here. I really spent the majority of our time really going through our relative strength and making sure we were clear on that. But did share with you that scan again. If you're seeing this on the recorded version, it will be down below the description section. You just want to click on more. The link will be down there. You want to copy that link as we showed you how to do in the presentation. But with that, I'll leave you with this, folks. This should be a lot of fun to look at over the weekend. Love to have you do it. Get familiar with finding those areas that maybe you're just seeing more flows going into them. And with that, thank you, Brent, so much for your help in the chat. And great to have you all here. Thanks for your comments and back and forth. You guys have a great weekend. It is Friday. All right. Take care. Have some fun out there. See you next time.